So with this concept that I do and have been doing for a long time called the infinite banking concept, you'll often hear in my videos me reference a segregated account. My name's Chris Naugle and I'm here to teach you how to be the bank. And a lot of times people get confused about this segregated account and they say, okay, if I have 3 policies, do I need 3 separate segregated accounts? Let me take you back to where this all began. You see, many years ago I read this book called Profit First. And in that book, he talked about segregating different pools of money within a business. And I got this idea. If I'm setting up a banking system, which is essentially what these IBC policies are designed so that I can take back the banking functions in my life and do and mimic exactly what a bank does. The one thing that I always found difficult for me is I found it difficult to track all the activity. In other words, if I'm putting money into my specially designed and engineered whole life, taking that money out, lending it out at 12%, taking the 12% interest and then sending it back to the policy, sometimes if I've got enough of those going on, I lose track of things. And I'm sure you do too. So what we decided to do is we needed some books and records. We needed some tracking mechanisms. But what's easier than this? What we decided to do is we just said from the book, Profit First, we said, let's create a separate bank account. And that separate bank account is just segregated for our banking activity, hence the name segregated account. So when I put money into the policy and I take a loan from my policy to lend out, it stops and I deposit it in this segregated bank account. I don't even deposit it, I literally just link it to my IBC policy so that when I take the loan, the insurance company sends the money directly to this segregated bank account. And the segregated bank account is no different than your checking account, except for it has one sole purpose, and that is for the activity from my infinite banking concept policies. That's it. I take a loan from the policy, I put it into the segregated account, I then write a check from that segregated account, and I send that money out through privatemoneyclub.com, and I lend it at 12%. That borrower then sends me checks every month for the interest payment on that loan. That check gets deposited into the segregated account. Then I set up an automatic transfer from the segregated account back to the policy to repay the loan. All of this happens automatically. I don't have to work any harder outside of going to the bank and setting up the bank account. But today, you don't even need to go to the bank anymore. You can just call them and they'll mail you all the paperwork to set the account up. So the reason we use the segregated account is very simple: books and records. So now let's get into the specifics. Now that you understand what we're referring to, we're building a banking system, and that banking system includes a segregated bank account, and it also includes a specially designed and engineered whole life, and then we're just finding somewhere to make that money go to work. So then why does this video matter? This video matters because a lot of people don't do this. A lot of people just take loans from their policy and then they put it into their regular checking account where they pay their mortgage, they pay their groceries, they buy the diapers, they take the vacations. All the money goes into this, what I would call the black hole of money. And then for some reason, at the end of the day, there just never seems to be any money left. Does that sound right to you? Because I know that's how mine works. My account where I pay all of my bills is the black hole. Money goes into it, and I'll tell you what, there's never any left. My wife makes sure of that. Hey, might not be your story, but that's the story and I'm sticking to it. Even in business, the reason that he came up with that book, Profit First, is because the same thing happens in business. Tell me if I'm wrong. You go out and you do what you do in a business. All that money that you make goes into your business bank account and then you pay all your bills. How much money's left after you're all done? And then a lot of people, just because there's checks in the checkbook, they think there's money in the bank. So they just keep writing checks and they're like, oh, bounced one. And then the bank charges you $32 and on we go, round and round we go. So that book said, hey, why don't you just open a separate bank account for the different things that you're doing? Why don't we open a profit account? Hence the book, Profit First. We'll open an account that's for profit. So every month when you profit, you take the profits out of that black hole and you put it into this account that is only there to pay you your profits when you want them. Then he said, open another account for marketing. So then you take the money that you would budget for marketing monthly and you just get it out of that black hole and you put it into this marketing account. So when I ask you the question, or when you ask me, why does this video matter? That's why it matters. Because now all of a sudden you've got tracking mechanisms. All the dollars that you need are all in these segregated bank accounts, which all have a sole purpose of doing one thing. It eliminates the problem of the black hole bank account. So in the world that I'm in with infinite banking and creating banking systems, we use this. The second thing, I think you already know. I keep mentioning this policy, and some of you are a little slow to catch on. So let me just go back to the basics. The policy I'm referring to is nothing more than a specially designed and engineered whole life insurance policy from a mutually owned company that pays dividends. And these whole life policies, like I just said, but you missed it, are specially designed and engineered to do banking. They don't function like your regular whole life policy. They don't function like the policy that Dave Ramsey said is a terrible place to put your money. They function very much like a savings account. But a savings account that pays a much higher guaranteed interest rate. A savings account that every year pays you a dividend. A savings account that allows your money to grow tax-free. Allows that money to sit in an account that is protected against judgments and liabilities in most states. And an account that allows you access to that money when you want by just clicking a few buttons. Oh, and by the way, it also pays a death benefit the day you die. I bet your bank account doesn't do that. So what is the policy? That's what it is. Why do we use it? One word, compound interest. It's actually two words, but I like to just think of it as one. And I'm going to add a secondary word to that, uninterrupted compound interest. Technically three words, but who's counting? On to the next one. How many policies can you have? If you watch my videos, you'll know that I have 9 of these specially designed and engineered whole lives. And a lot of people think it's a race to, who can get the most policies. Well, that's actually a mistake. You don't want 9 policies, but you will have 9 policies. And the reason for that is every policy you build is built for that period of time in your life. In other words, today, or actually let me use my example, when I first started doing this, I didn't have a lot of extra money. When I put money in that black hole, at the end of the month, there wasn't much left. And I don't know why. So the most I could put in was about $240. So that's how I started my first policy. But shortly after I started that first one at $240 a month, I wanted to put more than $240 a month away because it worked really well. But that policy was only built to hold $240 a month. So when people ask me, why do you have more than one policy? It's because I wanted the capacity to put more of my capital into my banking system. And to do that, I needed another branch office. Just like a traditional bank where they have multiple branch offices, my policies are a banking system. Therefore, I have multiple policies which serve as multiple branch offices for me. The second branch office I set up held about $560 a month. The third one was about $15,000 a year, and on and on and on. So each policy I opened gave me the capacity to put more money into my banking system, which gave me more money to then lend out and make money twice each time. And I didn't have to work any harder. So that's what the policy is, and that's why I have so many of them. But don't be in a race to have multiple policies. It's naturally going to happen as you make more money or as your money works for you to make more money that way, which is the ideal way to do it. Again, the fourth part is the segregated account. The reason I have a segregated account is it brings everything into one account. Books and records. Money in, money out, money in, money out. I have records, and all I need to do, if I want to see if somebody paid me that month on a specific loan I made, I just look at the segregated account. It's easy. Oh, he missed his payment.
Hey, Mr. Borrower, do you know oh, it's in the mail. Okay, great. Can you also mail another check for the late fee because you're supposed to pay on time? Thanks, bye.
The segregated account gives me books and records. It makes it very easy for me to see all the activity. But it also gives me a metric to know that when I put money into the segregated account, not all of that money can make its way back to my policies. When there's extra money in the segregated account, I get goosebumps because that means that now I'm letting the traditional bank use too much of my money to go out and make 400 and 1,300% more than they're paying me. That's not going to happen on my clock. So what I do is I then figure out how much extra every month is coming into this account, and I start the next policy. So that's how I build the banking system. It's a simple metric of a segregated account. The last I kind of already explained, but let's hit it again. When do you need a segregated account for multiple policies? You only need one. The only time you'd ever have two is if you have one policy or 10 policies or 100, doesn't matter. You need one segregated account. But let's say your spouse sets up her own banking policy. Well, she would then have her own segregated account. Let's say then you open in your business a policy that is owned by your company. We would call that COLI, company-owned life insurance. Your company would have a segregated bank account. So folks, that is a very important topic. You should read the book Profit First to learn how that was used in its original capacity and then how we evolved it into what we call the segregated account. So if you liked this video, then you're going to want to check this one out. What in the world is going on? Recession incoming, or better yet, the recession's already here. So why don't you watch that video to learn what's next? My name's Chris Naugle, and I'm here to teach you how to be the bank.